Okay, let's move to the next review. I'm going to review for you the pound versus Australian dollar. I don't have targets for this. We will find them in the review as we go. And the pound versus Australian dollar it's quite an interesting market because actually it's probably the market that has the highest volatility in the forex markets. The market that moves, you can average 104, 106 pips per day, which means that there are days that are special for this market. So a lot of volatility. Obviously, volatility is not all, because if you manage risk properly, your risk management is adjusted to volatility, which means that probably the kind of return to risk that you obtain are probably similar, unless you work on very small time frames and you take positions on very small time frames, which is something that I don't do consistently, and because I like to trade on the 4-hour daily and wait for position to set up on those time frames and then come down to maybe the 60 minutes, rarely the 5 minutes. But that's possible anyhow. So when we look at this market, the pound versus Australian dollar, we see these large moves, 1 day or 1 week moves, and again, that's because this market has the highest average pip move, highest in among forex pairs. And based on the data I have, if we don't have higher highs here, we would say that this market is moving laterally. Why is this market moving laterally? Well, because actually bears were not capable of holding this price down, and bulls initially they tried and they succeeded, but then they failed. Right now, obviously, this market has bearish bias, and the reason for that is that monthly bull and bears might not have their ideas clear, but I can tell that the weekly bears have their idea very, very shooting up and clear here. In fact, they actually shorted this market at 202.60 area, and the 207.23 held, and this market was pushed in the last few months here into an area of target to 173.82. This area of target is actually an area where you can see this market actually moved around for some time, and the reason is that there was some profit taking here that has pushed price higher, but nevertheless, this market is continuing lower. One case we could make is that this market is actually, again, I mean, has behaved very technically here. When you have the aggressive move, lows to lows here, as you can see, we got participation into this area, and again, profit taking coming right at that 167.40. And the reason that happens is because there are indeed algorithms who are actually watching this market. Now, this market also failed the sequence here because, the low to low here showed that the bears were not capable of holding this price, which suggests a number of things here, and particularly the potential for this market to reverse drastically, either at 163.70 or lower, close to this previous size here. But there are previous size also around 163.70. So this market is indeed on a larger time frame, still in a lateral move, very large lateral move. In fact, I don't use trend lines, but if you wanted to model a lateral market, you would do it using trend lines, and the reality is that these trend lines only help modeling internal conditions of the market where bulls and bears are not committed, at least on the larger time frame. Okay, so when we go back and when we go down to the daily, and we overimpose the other models, we can clearly see here, participation in daily bear, daily bearish value area here. And then again, when the market made it into the weekly, again, we had some sort of participation there, which is pretty interesting, 177 to 167, it's 1,000 pips here. Okay, so it's really important to monitor these areas, particularly when they are in line with smart money. Now, these daily short value area here was indeed aligned with the daily extension short here, and so it was just a great opportunity, and there was participation here with a clear target and the possibility to bring price to that target and take profits or even partial profits before this full retrace into that area. But when the market came there, although the smart money was not supporting shorts any longer, there was very strong weekly value area short there that actually kept pushing this price lower. So as you can see, some of the reason, of course, I mean, these two models do not model 100% the behavior of the market. I think that no model can do that, but it's good enough and shows how the ball in a way goes from the smart money area field to the dump money area field, and they kind of exchange it. Sometimes they agree, so the market moves down very, very quickly and strongly with little retraces, which implies little risks as well. And sometimes they do not agree. If we look at this price, initially here we had the market reacting to this area here, which was the next measure move in the sequence here. However, it encountered a bullish daily value area that actually pushed this price higher, above the level that Algos were looking at, but into that the value area there. So that short value area. So that's good enough, and is actually suggesting that could be participation. That there are ways to procedurally time these areas as well, so that we can take advantage of that. All right. So what can we anticipate in this market? 163.60 and 158.40. This could be two areas, and be careful in this market. This market could actually put up brisk profit taking, very, very brisk. And don't forget, and there could be something like this, don't forget that this market can move a lot, 188 to 119.91.35. So, we talk about 250 pips in one day here. So that's the kind of moves that we can get in this market. All right. And this concludes the review for the pound versus Australian dollar.